Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the top events that are expected to be driving the markets today. Then once we cover that, hopefully everyone will trade from an informed perspective. So as always, I would like to state that this session does not constitute investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So I can see a lot of people have already joined, and good morning, everyone. Big shout out to Marcelina Mwangi for being the first to join and comment. So let's get things started. So from the economic calendar, as we can all see, this is from the forexfactory.com website. Today seems like a quite busy day. With some of the early morning developments in the market being that in Japan, the bank lending slowed down to 2.8%, down from 3.0% in the previous reading. And producer price index really improved to 4.2%, up from 4.1% in the prior reading. So inflation expectations in Australia improved to 4.2% compared to the previous reading of 3.6%. Meaning that Australian citizens are expecting that inflation will be spiking higher in the near future. Then the key highlight of this morning's news was inflation data from China, where for the second consecutive reading, we have seen the Chinese economy in deflation at negative 0.1%. So if you look at the developments here in the chart of Chinese economy, China's consumer prices fell by 0.1% year-on-year in March 2025, missing market expectations of a positive 0.1% increase and marking the second consecutive month of drop as the ongoing trade dispute with the US threatens to exert further downward pressure on prices. Still, the latest drop was significantly milder than February's 0.7% fall, supported by a smaller decline in food prices as pork prices accelerated and fresh fruit costs rebounded. Meanwhile, non-food prices rose by 0.2%, reversing a slight dip of 0.1% in February, driven by increases in housing, healthcare, and education, despite a continued decline in transport costs. Core inflation, which excludes volatile food and fuel prices, was up 0.5% in March, rebounding from 0.1% decrease in February. So on a monthly basis, the CPI declined by 0.4%, a steeper fall than the 0.2% drop in February, marking the second straight month of contraction. So clearly, we know that China has been experiencing a much better inflation than the rest of the world, in that inflation has been lower than the People's Bank of China's target. And in this case, we have seen inflation declining from a high of 0.6% in August last year, going all the way down to 0.1% in December. We had a slight uptick in January. And then Feb, March, we have seen prices actually moving in the opposite direction. So when you see prices really dropping in China, it means that they are risking getting into deflationary territory. And the reaction we have seen by the People's Bank of China is basically stimulating the economy. So inflation that is way lower than the central bank's target tends to lead to the central bank cutting rates and injecting more cash into the economy. And that has been the overall expectation. And with that happening, we expect the Chinese yuan to continue weakening. On the other hand, we expect Chinese stocks to experience a boost and make some impressive recovery for the rest of the year. So outside of that, the main event for the day on the economic calendar is expected to be the US inflation report, which will be coming up at 3:30 p.m. So as the title of today's session suggests, we'll be focusing on CPI. So the consumer price index for the US is expected to have slowed down in March to 2.5%, down from the prior reading of 2.8%. So this means that the inflation rate in the US is getting closer to the Fed target of 2%. And with that, it creates the necessary conditions for the Fed to continue cutting interest rates. So on the month, we expect that in March, prices of a basket of goods and services consumed by the average household in the US may have increased by 0.1% in March, but then this is much slower than the previous reading, which was a 0.2% increase. So we'll be looking at the actual data later this afternoon, and of course, core CPI, which measures a basket of goods and services consumed by Americans outside food and fuel. And in this case, we're expecting an increase of 0.3% in March, which is slightly higher than the previous reading of 0.2%. So this is expected to be a key driver in the US dollar movements, US dollar pairs, including gold, silver. We could be seeing oil markets reacting to this. And on top of these, US equity indices, the SP 500, the Dow Jones, the NASDAQ, as well as the Russell indices. So we're expecting to see a lot of volatility from 3:30 p.m. So we know that for the better part of the week, news on the economic calendar haven't been moving things around. The main mover in the markets has been Trump's trade war against the world. So the key developments on tariffs have been the main mover in the markets. However, after seeing the CPI data, we'll have a better view of what to expect on the next Fed meeting. So in that regard, we may be expecting some good volatility and at least some form of normalcy resuming into the markets, where at least some items on the economic calendar have an impact on prices, where previously in the last couple of days, since April 2, that was Liberation Day in the US when Trump announced tariffs across board against the world. Since then, the events on the economic calendar have had little to no impact on the markets. However, on this one, good likelihood that we will be seeing developments from the markets as a result of the CPI data, and that could bring back some normalcy in the markets. So as for the Fed and the next rate decision, we know that Trump has been pressuring Jerome Powell, who is the Fed chair, to cut interest rates. And this has been significant pressure. And now we are looking at an inflation report, which is very important or very key for Fed to make a decision on the next meeting. So the next Fed decision is happening in 27 days, which will be in May. And the exact date will be the 7th of May, 2025. So we know that 3 weeks ago, the potential for the Fed cutting interest rates was about 3%. But now we are looking at this number having increased to 20.5% compared to the 3% we were seeing. So this basically means that the market is still pricing in a possibility that the Fed will be holding rates at the current level, which is a 79.5% probability, and a rate cut is at 20.5% probability. So we'll be watching this closely because this CME FedWatch tool tends to be very accurate in predicting the Fed rate decisions. So in this case, there's still a very good chance that the Fed will be holding rates at the current level. So from that, we also know that once the CPI report is out, we expect a market reaction. So let's talk about that before we move on to the next item. So if CPI comes in at 2.5% or even lower than this, basically means that the Fed is achieving its goal of having inflation getting to 2% target. And in that case, the Fed may continue cutting rates. And by cutting rates, we could be seeing the dollar continuing to weaken. So the opposite is also true. If we see inflation remaining elevated, let's say at 2.8% or higher, which was the previous reading, then in that case, the market could question the Fed's resolve, and we could be seeing the Fed holding rates higher for longer, which would likely strengthen the dollar. So a weaker inflation, a weaker dollar, stronger inflation, stronger dollar. And that's the overall expectation in the markets this afternoon. So besides that, we also need to touch on Trump and try to understand what he's doing. So I'm looking at some of the decisions he have been making. So I just want us to go through a summary of the timeline of Trump's second term. So we know that he was inaugurated on 20th January. And during his inauguration speech, uh, he said he plans to overhaul the global trading system to protect American workers and introduce tariffs on foreign countries to enrich our citizens. That was his direct statement from 20th January. So fast forward 11, 12 days later, that was on 1st February, the US president announces a 25% levy on Canadian and Mexican exports to the US and an additional 10% on China. So this caused some panic in the markets. So once he announced the 25% levy on Canada and Mexico, and then 10% on China, this is where the volatility started getting interesting. So before that, the net markets were net positive about Trump. So when he won the elections in November, we saw the markets pumping higher, and even on the inauguration day, the markets were still positive. But then after 1st February, this is when things started cascading downwards. Then on that February, Mexico and Canada reached a deal to pause US tariffs for 1 month. In this case, the markets recovered from the earlier sell-off on 1st February. So fast forward to 10th February, Trump announces a 25% import tax on all steel and aluminum entering the US. So this drove the commodities markets lower and, of course, caused a very big panic, especially on the stock market. So on 4th of March, the White House places an additional tariff on Chinese imports. This didn't impact the markets much. Then on 12th of March, Trump's 25% steel and aluminum tariffs take effect. We see more panic and uncertainty in the markets. And while all this was happening, gold was just pumping higher as investors braced for more action on tariffs, and this led to gold hitting new all-time highs. So fast forward to 26th March, the White House reveals new 25% duties on car and car parts coming into the US, and those take effect from 2nd April. So in this case, we had a market-wide panic, especially for American car manufacturers that manufacture their cars outside the US, but have a big market segment in the US. So case in point, an example is Tesla that manufactures a lot of cars in China. They also manufacture in the US and other countries. But then if they manufacture a lot of their cars in China and they bring those cars to the US, then that would attract 25% duties. So we had a big sell-off in Tesla and other automakers, leading to a big sell-off in tech indices like the Nasdaq. So 2nd of April, this was the much hyped Liberation Day. So Trump says that the US will impose reciprocal tariffs on certain countries, as well as a universal 10% levy on imports from all other countries. So on April 2, this is when he announced a list of tariffs on almost every other country in the world. So everyone got 10%, while some got higher than 10%, with some of the key highlights being a 34% tariff on China, which was on top of the previous 20%, which would take them to 54%, 50% on Vietnam and Cambodia. Even Madagascar was not spared. They got, I believe, 30%, South Africa 30%. So this was having, I would say, worldwide impacts. And this led to a major sell-off in US as well as global equities, as people didn't know what would happen after this. So fast forward 5th April, the 10% baseline tariff takes effect. And now today we are 5 days into the 10% baseline tariff. So April 9, I believe this was earlier this week. So before we get to April 9, we know that last Sunday, that was around 6th of April, China responded with their announcement that they imposing 34% tariffs on US goods. and then later on, I believe April 8 at night, going into April 9, they added a further 50%, taking their tariffs against the US to 84%. So Trump had already slapped them with 50%, which had tallied their total tariffs to 104%. And then yesterday is when Trump increased this to 125%, and then removed all the other tariffs from the other countries by basically announcing a 90-day pause for all countries except China. With a universal 10% tariffs across board, Trump hikes tariffs on China to 125%. So this has been quite a roller coaster, and the markets have been reacting to this on a daily with big moves downwards as panic selling took effect. And yesterday we experienced panic buying, and as a result, we had one of the biggest rallies in the stock market on record ever. And this is ranging not just from the US economy, but also from Japanese economy, European economies, and so on. So 10th of April is today. China 84% levies on the US take effect. So from today, any goods that are US sells in China, they will all attract 84% levies or tariffs. So clearly, it's quite a development, quite a roller coaster, quite volatility in the markets. I don't know whether you take this positively in your trading. So from the comment section, kindly highlight if this has been kind to your trading activity, or it has been the worst period trading in the markets. So I want to hear your feedback. So I'm checking the comment section. Good morning, Dennis Mwangi, Samuel Njoroge, Ronoke, Hilary, Jason, Paul Kerry, Simon Gikonyo, Sento Boy, Tom Isaac, Brian Maina, Eric Wanderi, Met Mboni, and Gibson Githai. Thank you guys for joining, and good morning. So how has Trump's policies impacted your trading, especially since inauguration on the 20th of January? So good morning, Jogu. So among other highlights in the markets, I'll try to be a bit faster. So clearly, on the US inflation rate, we know that US has been really struggling with inflation. So over the last 5 years, we know that inflation peaked at 9.1% in June 2022, as the US went on to hike interest rates at a record pace. And as the US was hiking interest rates, inflation started coming down and getting to a record low of 3.0% in June 2023. So since then, inflation has remained above 3% for a year. And then the first time we saw inflation dropping below 3%, notice this was a low of 3% in June 2023. So all the way to June 2024, this is when we had the first drop to 3% again. So a whole year inflation remained above 3%. So from June 2024, that is last year, we saw inflation dropping to a record low of 2.4% in September. And then we had months of consecutive increase in inflation, peaking at 3% again. And now in the last reading, we had a drop to 2.8%, and now we're expecting a drop to 2.5%. So the Fed has been considering these as heightened or elevated inflation, which basically risks what we term as stagflation. This is a period where an economy is stuck with a high inflation, despite their monetary policy changing to try and push inflation down. So in this case, it would be a big relief for Powell if inflation was to drop to 2.5% and below, and this would allow for more rate cuts. So clearly, we're expecting more of an improvement in inflation. After here, we had 4 consecutive months of gains, and in the last month, we had a drop. So this will be a pretty interesting update on inflation today, and I'm sure everyone is watching it, including Trump, who is becoming very public about economic indicators and how they are impacting American prices. So outside of that, looking at stock market's performance as of this morning. So after yesterday's record rally in US equities, today we are seeing a reversal with the SP 500 down 2%, Dow Jones 1.3%, and the Nasdaq 100 index down 2%. So after the record gains that we saw yesterday, the market seems to be giving back some of the gains this morning. So some of them are basically getting back into correction territory. So on the other hand, other stock market indices, especially Asian and European ones, are having a very good day today, with Japan's Nikkei 225 index being up 7%. So the UK stock market index is up 4%, the German DAX 5%, French 40 5%, Italy 40 5%. The Spanish IBEX is up almost 5%. Australian index is up 3.4%, Shanghai Composite 1.03%. India's Sensex is down 0.51%. Canada's stock benchmark index 5.4%, and Russia's 4.05% up. So if you look at this top global markets, they are all in the green this morning. So clearly, this is quite a development, and this is showing that the market is resuming some form of normalcy after the panic selling that we have been seeing in the last couple of days. However, if you ignored today's performance and you looked at the year-to-date performance of the top equity indices, you'd notice that the SP 500 is still down 8% on the year, the Dow Jones 5%, the Nasdaq 10%, the Nikkei 225 index 14%, the UK 100 1%. The German stock market, amazingly, is still at a positive with a 5% gain. France -1, Italy 1.92% in the positive. Spanish IBEX is also doing well, up 7% on the year. But then for Australia, we are down 6%, Shanghai 3.94, India Sensex 5.49, Canada 4.05, and of course Russia 4.1%. So clearly, indices are still on the negative year to date, despite the record gains we saw yesterday for the US equity indices, and of course for the rest of the indices that are positive today. Yes, it's a good recovery, but they have not yet gotten into the positive. So outside of that, I don't think there is any other notable thing except the bond market performance. So the US 10-year Treasury has been on quite a wild ride, with yesterday's performance showing a peak of 4.5% in the previous session. So this is when allegedly the Bank of Japan was dumping US Treasuries, leading to a very strong increase in yields, peaking at around 4.5%, 4.5159 to be specific. So since then, since yesterday, and after Trump announced the decision to suspend tariffs for 90 days, we saw the yields now starting to cool off, and now we are back down to 4.292, but still the yield on the 10-year Treasury bond is still significantly high, and this basically means that we could be expecting to see further dollar weakness. So that's it on the market analysis side. So we'll be doing some technical analysis as we approach the end of the presentation today. So I'm looking at the comment section. So one of the highlights, very bad blowing accounts. The volatility hasn't been kind on you. Apologies for that. So Euro USD analysis in a few. We are moving into technical analysis in a few. So it's worse, meaning that the volatility from Trump's leadership hasn't been really helping. Got hit to hit stop loss a couple of times. So mostly I'm seeing that the Trump's developments haven't been good for a lot of people. How is the USD strength going forward after posting tariffs for 90 days? We've been checking on that. Morning, Paris. So let's get into the technical analysis right away. So clearly, we know that the SP 500 basically moves by 1 or 2% a day. So I'll give you an example here. This is the SP 500. This is, okay, let's use the H1 so we can see the daily ranges. So I'll be removing all this. And then we look at the volatility we have seen over the last couple of days. So the range in the market as per yesterday was this. And the range is the difference between the high and the low. So if you measure from here to here, this was a 13% swing. So for a market that moves 2 to 3% a day, now moving 13% a day, that is quite a wild swing. So the day before that, the range was this. And if you measure from the high to the low, that's a 7% swing. So still more than triple the usual range that we get. The day before that, we had seen a range looking like this. So if you measure from the lowest price to the highest price, this was a range of 9%. And even the day before that, here we are looking at the market making such a move. So in this case, from this area to this area, it's 6%. So these are periods I would say that are not normal. So the markets are experiencing heightened volatility. So when there's an increase in volatility, it basically means that as a trader, you also experience a heightened risk and also a heightened opportunity. So remember, the markets tend to have this feature where if there's increased volatility, then this brings in increased opportunity, but also increased risk. So even if you trade with the swings, daily high and daily low swings, you'll notice that if you are wrong, the punishment is much bigger, and if you are right, then the profit is also much bigger than normal. So if you would have to wait for, let's say, a week to make 10% on, let's say, SP 500, yesterday, if you bought at the daily low and you sold at the high, you would be up 12%. So this is normally something that would take you more than a week, but now you could make that money in a day. Then if you're on the wrong side of the market, the punishment is still the same. So this basically means that you can still trade the same market. All you have to do is to lower your leverage. So if you normally trade a lot size of 1, maybe consider trading a much smaller lot size, maybe 0.2, 0.3, and that would basically allow you to have a much wider stop loss, accommodating for increased volatility, and of course, still enjoy the big market moves. So if you want to weather out this period of uncertainty and increased volatility, try reducing your lot size, and this will largely improve your trading performance. So after yesterday's big rally, today we are seeing that the market was largely quiet in the early morning trading. So we didn't have much happening here. But now as we enter the London session, this is a key determinant of the market direction. So of course, we know that this is indicative of sellers coming back into the market. And the most obvious target is the market extending this sell-off to a previous high. And this is a high that we had already seen on Tuesday. So SP 500 getting to 5,262 is more of a likelihood. So you look at the Dow Jones, it's also doing the same thing. So we are already seeing evidence of sellers coming back into the markets. So nothing was happening here during the Asian session. All this price action is coming at the London Open. So good chance we extend down to this area. And for the Nasdaq, it's still something similar. We know that the three indices tend to be highly correlated. So in this case, especially when the markets are a lot more sentimental, it seems like the market will be likely headed to 18,219 with some profit taking from yesterday's trades. So on the Bitcoin side, we are seeing the market pulling back after a very strong rally that ended up getting Bitcoin back above 80K and to $83,000 per Bitcoin. So now we are back to a previous high. So the same idea or concept you have used on the SP 500 indicates that Bitcoin is likely headed to 81,191, and then from there we'll see what happens next. So it's a key level that was acting as a support and now turned into, yes, another support. So we expect the market to pull back and retest this area here before we see whether it's a reversal or a continuation. So the dollar index, as of this morning, has been on a big sell-off. Apologies for that. So with this sell-off we're seeing in the dollar index, we have seen a recovery in the majors. The Swiss franc being one of the strongest currency that is making a comeback against the dollar. So after yesterday evening's very strong rally in the dollar against the Swiss franc, today we are seeing a complete reversal with, in this case, what we term as a reversal back to mean. So a very strong rally happened in the afternoon. Market goes all the way up. Volatility dies out. At some point, you'll notice that there was some form of price action here where volatility was dying out. So market breaks out, retests, pulls down, and then comes back, retests, and fails to form a new high. So after this, you can see the sharp drop, and now we are going back to mean where the original move started. So in this case, the overall expectation is that the market drops to 0.84143 for USD Swiss franc. So the UK 100 index has already completed something that we are speculating on the SP 500, the Dow, and the Nasdaq. So it's back to a previous level that was acting as resistance, now seemingly support. And now we'll be looking at a potential correction and a reversion to mean, especially judging by today's development. So anytime we happen to see the market breaking below this area here, then it will likely mean that the market extends back to mean where the move had already started. But then if the market fails to break here, then the overall expectation is that we have a bounce and we beat yesterday's highs. So this will be a key and important level to observe for the UK 100 index. So Euro USD made a pretty strong bounce early this morning and has only been accelerating higher. So it's one of the currencies with the highest weights in the dollar index equation. So in this case, we are seeing a very strong bounce in the market getting back to some previous highs. So it may not be like overall strong for the rest of the day. At some point, we could be seeing the dollar index regaining some of its strength. But for now, the overall expectation is that the euro continues to gain against the dollar for the day. So yesterday's high could be a nice target for today. And of course, for pound USD, we're also seeing the currency making some gains, trying to regain some of what it had lost in the prior week. So yesterday and Tuesday, we saw the pound being pretty resilient. Today, it's pushing even higher. So potentially, if we break above 1.28876, then we might have a good chance of getting to the previous high of 1.29737, which was acting as a resistance. So for AUD USD, clearly, we had mentioned that this was a sideways momentum. So notice market having a sell-off, a sideways momentum. We can call this some form of accumulation zone. Then the market breaks towards the upper side. And now we are seeing some form of pullback, which will likely set up the next acceleration towards the previous high. So somewhere around 0.63305. So we expect to see at least the buyers coming back and eventually pushing the prices higher. So for USD JPY, we had been following this chart for a while. Of course, we expected further downside momentum. So after yesterday's strong bullish momentum, we can see the market pulling back and attempting to erase some of the gains. So clearly, if we were to revert back to mean, then the idea would be that the market continues dropping and eventually gets back to 144.888. So the Nikkei 225 index also had a very strong rally yesterday. Notice that from the swing low, the market gained by about 13%. But then today, we can see it's already erasing some of the gains. and continuing with the bearish momentum. So in this case, we could be expecting to see some further downside momentum, but at least perhaps to the high that we saw on Tuesday or the Monday's high. So Monday's high was around here, that is 3674, and we are very close to getting to Tuesday's high, which is 33,890. The price has already touched that level. Then we observe this area to see if the market will be bouncing or whether the market will be continuing with the bearish momentum. So more likely that the market takes the pullback all the way down, given that there is still a lot of uncertainty in the markets. There is still 10% uniform tariffs across the world by Trump. And despite the 90-day pause, there will be more developments, and China is still a big factor in the markets. So gold, being our favorite asset to trade, has made a 2-day response that basically erased all the panic selling we had seen in 3 days. So from the weekly chart, there was a big sell-off from a new all-time high of 3166 that took us all the way down to 2956. In this case, gold was literally down by 6.6%. And now from getting all the way down, notice that gold has rallied by 5%, and now it's risking getting us onto a new all-time high. So the pullback started on Tuesday, though the market pulled back towards the end of the day. So on Wednesday, this is when we had the biggest rally, and today, being Thursday, we are seeing more of an upside momentum. And of course, on a very short-term trend line, that is on the 15 minutes chart, we are already seeing something playing out here, and the market rejecting lower prices, setting up more ground for an acceleration in price. So in this case, I expect to see more bullish momentum and perhaps gold moving on to the next resistance area, somewhere around 31.36. So there's still good chance that we see gold accelerating higher, getting to 31.36 and potentially moving higher. So clearly, the idea is that the markets are still quite uncertain of Trump, and we could be seeing the market heading into a new all-time high above 31.66. So Brent oil made a very strong rally. Remember, it had hit a new low that was last seen in 2021. So after hitting that new low, we had a very strong rally yesterday in the evening. But then after the rally that we experienced, notice that this morning we didn't have much of a price action. The major break has happened at London Open, and good likelihood that we continue seeing price going downwards. And in this case, retesting a key level of around $62.285 per barrel. So clearly, we expect more downside in oil prices, given the Trump's drive to have more oil production. OPEC planning to have more oil production, and the global manufacturing is really suffering due to Trump's tariffs. So already GDPs across different countries are being revised downwards. So last asset we are checking here is the New Zealand USD. So clearly it's a market that was also entering a sideways momentum, similar to our USD. So for this period here, you can see the market was relatively sideways. And then you've had our break towards the upper side, a retest and a continuation. So the break happened here, a retest, continuation. Now we are having a pullback. But the idea is that the market continues to recover and potentially gets to a previous high. So if you look at this range or this period of time where the market was moving sideways, so there seems to be some form of liquidity around these areas here. So after the market rejected this area, we still expect to see a pump. But then if we get another pump, the expectation is that the market gets to the upper side of 0.57653. So European equity indices, I almost forgot this. You look at the EU 50 or the Euro Stocks 50, you can see a very strong sell-off. And this is right after the strong rally yesterday. So from the 15 minutes chart, it seems that there is still more downside potential. So we could be seeing the market correcting or giving back some of yesterday's gains and getting to 48.19. So the German 40 stock market index. So also Tuesday's high could be a nice target as the market pulls back and people reconcile the impact of Trump's tariffs. So the Spanish IBEX are also doing the same. So it seems like it's the same exact pattern across board for all major stock market indices. So a pullback, perhaps retesting Tuesday's high. And of course, for the France 40 stock market index, it's very close to Tuesday's high. So still the same pattern. I expect to see the market retesting that area. So for USD CAD, clearly attempting to find a bottom here, but still quite bearish. So given the weakness in the dollar, so good chance that we see the market extending to the previous low. In this case, 1.40239 as the target area. So given that even when you see such a bounce, there's still more room for short sellers pushing the prices lower. So for silver traders, we know that it has not been easy trading silver that doesn't have a strong correlation with gold. So in traditional, or I would say normal market trading, we have mostly seen silver having this relationship with gold, where it was easy to trade, but now we are seeing something completely different, while gold has been bullish for 2 consecutive days, and it's now looking likely that gold is going into a new all-time high. Silver is still enduring a big sell-off that happened in the past couple of days. And then here we can already see silver attempting to recover, but the bullishness is not as much as gold. However, overall, I expect that silver will continue pushing higher. So yes, it's facing a major hurdle in this area here. You can see the sequence of areas here that that price action level has been a hurdle in movement, in this case as resistance and then as support. So now that we have broken that area, it seems like we are retesting and potentially moving higher. So from the 1 hour time frame, this is how it looks like. So at some point, I expect to see some further upside momentum. In this case, moving on to the next target, which would be 32.765. So let's keep observing silver, especially looking for evidence of buyers coming back into the market. So that's it for the day. Also remember that these sessions tend to happen daily, Monday through to Friday, where we focus on different asset classes, the key market drivers, and once we cover that, we try to have as much education as possible. So on our latest episode on the Bullish Banter podcast, which is available on FX Pesa YouTube channel, we have a very interesting trader called FX Mwangi, who basically turned a $10 loss into a trading career. He started with $10, he lost the money, but he didn't give up. He just kept coming back, and now he has a whole trading career. So this episode is not yet live, but it's going live today. So once it premieres, you'll have the opportunity to watch it live for the first time and benefit by understanding his journey, some of the key lessons. And of course, deeper insights are discussed in this session, and hopefully you'll get to benefit into it. So in the previous episode, we had Dominic the Austrian. We really dug into Trump's impact on markets, Bitcoin, and the global economy. So when you have some time, go through it. We had an episode with V Dollar in the last 2 weeks. So also make sure to check it out. So quite a number of initiatives going on. So now I'm checking the comment section to see if I missed something. So what is the USD strength going forward after posting the tariffs for 90 days? So clearly, USD is not having its best of time. Remember, a lot of investors are trying to de-risk from the US economy. So in the near future, you'll be seeing a lot of investors avoiding US equities as well as avoiding the US dollar until things have at least calmed down and we don't have these daily decisions by Trump. Today he says this, tomorrow he says that. Today he says he's not removing tariffs, the following day he poses tariffs. So that kind of market environment is not very friendly for investors. So you might see the dollar weakening as investors attempt to leave the market for a while until there is some form of normalcy. So for Richard, he says the Trump trade was the best in history. For Collins, playing it safe, just started trading, been watching from the sidelines. What type of strategy is that? I don't know which one you are asking about. Kindly be specific. Asia has really been good this week. Unapata gold imesonga 500 pips. Yes, Asian markets have been pretty smooth unless Trump tweets something or the Chinese embassy. So USD card using the accumulation, manipulation, and distribution analysis. Do you think USD card will test 1.40455 level then buy? 1.40555. Yes, I believe that we should be seeing some further downside momentum in USD card. So if you look at the lows that we experienced back on the 3rd of April, it's more likely that the market will be dipping its fingers through that low and most likely some liquidity grab from there before moving higher. So I'll be observing this closely. GJEJ. So the markets have been so silent, but showing an opportunity to buy at the current dips. I believe there's still more to process in the markets. It's still not easy to compare what's happening with what happened at the beginning of the tariffs. So if the markets were dumping when Trump was implementing tariffs against Canada and Mexico, and this was just what 25% tariffs, what do you think about 125% tariffs against China, which is one of the biggest global trading partners for any country around? So I believe that's still significant, and that China is implementing what 84% tariffs on US goods, and the market hasn't yet processed this and understood the impact of this. So how about the 10% tariffs on everyone else? Does that look like a bull market to you? So for me, it still looks like a bear market. Unless something changes, it's still looking fishy, and the current stock market rally might be one of those dead cat bounces. At some point, we continue seeing more downside momentum. So good question. What is everyone trading today? Of course, you don't want to be trading what everyone is trading. You want to trade what presents an opportunity based on your trading strategy. So seeing a lot of questions on the crosses, and guys, we try to avoid them. Newly introduced FANG index. Yes, the FANG index is one index that tracks some of the top US equities. It's usually with a double A. We had a typo, so it should be Facebook, Apple, Amazon, Netflix, and Google combined into one trading instrument. Of course, right now it's not the best of their times. Apple had to fry 5 planes in the US full of iPhones as a fear response due to Trump's tariffs, as well as Xi Jinping's tariffs. So Netflix is not having the best of moments, could be a target of some of these tariff negotiations. Google, the same. Amazon is already taking hits. A lot of orders are being cancelled due to tariffs and the pricing of products. Facebook could also be a big target. So investors are de-risking as per now. However, at some point, as we get some of these pullbacks, the FANG index might become very cheap and present opportunities to buy. But for now, I wouldn't be very positive about it. Do you offer trading live sessions? No, I do not. Thank you. Which area is gold likely to retest before continuing its upwards trend? So, pretty interesting question. It's already retesting an area that was acting as a low. So, if you're looking at, I would say 31st of March and the 1st of April had two interesting lows, and gold is looking to retest those lows. So, thank you for the question. Can we expect a recession? Yes, a mild one, not the biggest of recessions that you would say. So there is no natural cause. This is more of politics and global trade war. So if there will be a recession, it's more of an engineered one, not like COVID or the 2008 global financial crisis. It's more of an engineered one, which the US can easily print out of. What's your take on why the Kenya shilling is stuck at 129, no matter changes in the global market? CBK governor had a lot to talk about this, so kindly check the CBK YouTube channel. He talked extensively about this. So clearly, they are just managing the shilling to make sure that we have stable prices in the economy, which is in the CBK mandate. Do you cover both London and US stocks? Yes. If you have any requests, kindly send them. We will cover them on the next session. Stock companies news. Most of the stock screeners tend to be on subscription, but you can check FinViz. It has some really good data. You can also check Yahoo Finance, some good data, and many others. So it depends on what exactly you want to learn about stocks. So correlation between oil, Canadian dollar, and gold. So correlations, as I've always said, they are not permanent. They are relationships that exist for a while, and some other times they don't exist. So, for instance, if you're looking at normal market conditions, oil prices tend to correlate positively with the Canadian dollar. So, when the Canadian dollar is doing well, or oil is doing well, they tend to move in the same direction. But for instance, in the last couple of days, this relationship has been broken. So gold and oil, if let's say we have a net positive commodities day, then you'll have oil and gold doing well. But now we know that gold is not being driven by demand and supply. In this case, it's a market sentiment. A lot of sentiment is driving gold as a result of fears and uncertainties surrounding Trump, the EU, and also China. So all these fear driving gold higher. It's not based on the supply and demand of gold. So in that case, we basically say that the correlations are broken as of this moment. So try to avoid the correlations and trade what you see, what the market is showing you. So we have already covered the analysis for gold. I believe you joined late. The session is live on YouTube. It's being recorded, so you can rewatch right after this in case you missed a point. Believe we have done over an hour. So thank you very much, guys. Thank you for your time. And I hope to see you on the next session. Remember, if you don't have an account, check the links in the description below to register for a trading account. And if you're just beginning your trading journey, check the novice to pro session available on FXPesa YouTube. It's a course designed to help you begin your trading journey. And if you don't have a trading app yet, check out the Equity Trader, equity with an I at the end, Equity Trader by FXPesa on your Play Store or App Store, and download that trading app. Begin practicing as soon as now. So that's it. Enjoy the rest of your day, and I hope that you have a profitable day.